So you're thinking about getting into land investing, huh? Well, how much cash do you need to start? That question and a whole lot more answered in today's video. What's going on, guys? This is Sumner Healey from landinvestor.co. If you're new here, I sell land on the internet. In the last 18 months, I've done a little over $2.2 million in raw land sales, all on the internet. And I make these videos to document my journey and hopefully help others along the way. Now, this is an age-old question in the world of land investing. It's an age-old question in the world of starting a business. How much cash do you need to start a freaking business? Well, I can tell you a few things. One, I can tell you my experience. I can tell you the experience of previous students. And then I can give you my general recommendations in terms of what I see working out there. Now, I started my land investing business with $9,000. And I really stumbled into the world of land investing, but once I got a sniff that there was an opportunity there, I said, you know what? I've got X amount in my bank account and I'm gonna dedicate $9,000 to this project. I look at everything in life as a big old experiment. So anytime something's got my attention, I say, hey, I'm gonna experiment with this and I'll set aside a portion of money, or I'll set aside a portion of my time, whatever it may be in that circumstance. And the truth is, starting with $9,000 was hard as heck. Let me tell you why. This is a capital intensive business and there's no way around it. You know, as you scale up, it does become realistic that you can start having people fund your deals for you, but when you're starting out, odds are you're gonna be funding your own deals. And outside of the actual acquisitions budget, you've got the software costs, you've got the cost of data, and depending on the marketing channel that you're using, you're most likely gonna have the cost of mailing. Now in this business, direct mail makes up the bulk of what we do and what a lot of other land investors do because it's super duper effective. And it's the only marketing channel where you can advertise and include a purchase agreement in that advertisement and allow someone to make a decision right when they receive your letter. You see, cold calling and cold texting and all that stuff is beautiful, but one of the problems is you don't give that person the ability to act immediately. So what we do in our business is we send out blind offers. So it says, hey, Mr. Seller, will pay you $40,000 for your property. Just sign on the dotted line and we'll open up title and we'll be off to the races. So let's break down the math. Let's assume you are using direct mail. Let's say you're starting with $5,000. Well, if you're going out there and you're looking to secure deals of quality, deals where you're truly buying them at a discount and you've got built-in equity on the deal, we're gonna say you're gonna need to send out at least 3,000 to 4,000 letters to get a decent enough sample size to get more than one inbound deal that's actually solid. And you have to take into account when you're first starting out, odds are your ability at pricing and comping markets is going to be less than perfect. So let's say you're going with 3,000 letters to start. Now, because you're not buying your mailing in bulk, you're most likely going to be at about 50 cents per letter. That's about industry standard these days. And that's going to be for a 2-page letter. One's going to have your ad copy and the other one's going to have your purchase agreement. Then for the cost of data, you're going to be at about 10 cents per record. So already you're looking at $1,800 and that leaves you with $3,200 on the back end. Now, when you're starting out, you can run things pretty lean, but you're going to need a CRM that'll cost you about $70 per month. I typically recommend Follow Up Boss, which is $69.99. And then you're going to need some platform to make calls from. Most VoIP dialers are going to cost anywhere between $7 a month to $25 a month. So the actual software stack to get started isn't anything crazy. So you send your campaigns out, and let's say you send out 3,000 letters. What you should convert off that, depending on the quality of the properties you're going after and the price point you're going after and the market you're going after, should be anywhere on the low end of 1 quality deal, maybe up to 3 quality deals. In our business currently, we're seeing about 1 quality deal that we'll actually close on for about 2,000 to 2,500 letters. Now here's a rub. You got 1 to 3 new inbound deals, but you only have $3,200 to close those deals. And if you're going after quality assets, the odds that you're gonna be buying any property in that price point is hyper unlikely. And this is the conundrum with starting on such a low budget, right? You want to go after good deals. You want to go after deals where you're truly buying equity and there's actually a big spread in between, but how do you close on those deals? So the only way to make this work is you have to reframe and say, you know what? I'm not going to go after those more quality type deals where I'm truly buying equity. You have to reframe your search criteria and go after the cheap, small dollar, rural lots out in the middle of freaking nowhere. And that's how I started. I was going after properties I was buying for $700, $800, $900, $1,000. And I would turn around and sell them for $2,000, $2,500, maybe $3,000 if I was lucky. But in most instances, I was just going and doubling my money. At that time, I was not looking to do any owner financing, and it makes sense. When you're starting on that lean of a budget, what you really need is the velocity of capital. You need to be able to put your money in and get a big chunk of cash back out. If you're doing the owner financing stuff, it's great. You can sell it at a higher multiple, but the odds of you getting your basis back anytime soon are unlikely. For most of our owner financing deals, it takes about 6 to 12 months before we even get our basis back. And in a lot of cases, cases, for those more entry-level type properties, the end users, the actual buyers out there, they've been conditioned to expect, 49 down, 99 down, 199 down. It's not the kind of inventory where you're going to get a large down payment. If we look at it as a down payment percentage standpoint, kind of the industry average out there for those more entry-level type properties is anywhere between 2% to maybe 5% or maybe 10% of the actual sales price. Now those numbers are wildly different as you're going up market and going after nicer properties, but the trouble is end users and buyers for those cheaper entry-level properties, they've been conditioned to expect super low down payments. You're also working with a demographic that typically doesn't have a ton of liquidity, right? That's why they're going after a $2,500 property or a $4,000 property, because they don't have a ton of cash in their pocket. So for a lot of them, the expectation is, hey, I'm gonna put $99 down or $199 down. And so when you're first starting out, I advise opting to not go the route of doing any owner financing unless you've got serious liquidity behind you. But in this example, if you're starting with $5,000, what you need to do is go after the cheaper stuff and start compounding that. And I'm not gonna lie, it's a pain in the butt. It's not easy, it's a grind. Is it better than working a 9-to-5 job? Heck yes it is, but it still requires some serious elbow grease. So what I did in my first year is I did a little over 55 deals. They were just small dollar deals. I put a couple $1,000 in, typically sell them for about 100% return. Now again, because the demographic that's going after the cheaper lots, they typically don't have a ton of liquidity. You need to make it such a no-brainer deal. Where other properties are trading for $3 to $4 grand, your listing here is at $2,500, right? You have to be what we call the next logical sale in the market. So yes, you can go that route when you're first starting out. My recommendation would be to save your capital, grow a nest egg, and that way you can go after higher quality properties. You can engage title companies for the closing. You don't have to worry about buying properties with any clouds on their title. You can hire photographers for the listing. You can use great platforms like land.com to go list the properties. And ultimately, you're gonna be working with a much easier demographic to work with in regards to sellers and in regard to buyers. The truth is, no one tells you this in this business, but working the cheaper properties is an absolute grind. You work with really tough sellers, you work with really tough buyers. You don't have enough margin typically to list on the premium listing platforms. And in a lot of cases, you can't utilize the service of a title company. Now, I guess you could say that, yes, you gotta pay your dues when you're first starting out, but ideally, if I was starting over again, I would want to have $20,000 to $25,000 set up. It's going to allow us a fair bit of money for marketing. It's going to allow us to actually have a serious acquisitions budget. See, if we backtrack with that example of the 3,000 letters, then if we go and do that route and we've got the liquidity of 20 to 25 grand, we can actually close on some quality inventory ourselves. Now, eventually, as you scale up in this business, there will become a time where you have a track record and people will start reaching out in terms of wanting to fund your deals. It's turned into a pretty big industry in the world of land investing, and it's an incredible opportunity. But in most cases, you need a track record. And it's not even just that the deal funders want that. I think ultimately you should start building up some confidence before you go and take other people's money. Now, I have had students that have started with as low as $10,000 and they've made it work as well, much like I did. But again, it's a really tricky grind. So my recommendation is $20,000 to $25,000 is ideal. And what you can do is, if you're first starting out, bring someone along for the journey. Not only is that going to add a level of accountability, but find someone that's got capital, right? And say, hey, I've got the vision, I know how to execute on this, let's partner up. And maybe you start an LLC with that person and you start growing that together. And maybe eventually you can branch off on your own and do your own deals. But if you can bring in a money partner from the jump, but go into it together, where they're not just a one-off deal funder, you're saying, hey, we're gonna go into this opportunity together. I think it's a really great avenue to go. That could be with a family member, that could be with a friend, that could be with a colleague. And that's something that I have seen play out really, really effectively. Because again, some deal funders are gonna be gun shy to fund your deals if you don't have a track record. But if you bring someone in from the beginning, you create an LLC together, then you start working together, typically they're gonna be a little more bought in on the vision. And so that can be a great route to go in terms of bringing in a money partner. And then you can also get the added level of accountability and partnership. And I actually think this is a business that lends really well to having partners involved in. Now, if you do have $20,000 to $25,000 set aside, I would say go full steam ahead. There is truly no other business that I've experienced where you can have such outsized returns in terms of starting with a small level of capital. If we look at any other business out there, starting with 20 to 25 grand is a joke, right? You're never gonna open up a brick and mortar store with 25 grand. Rarely are you gonna start an e-commerce company with 25 grand. You're not gonna start doing the BRRRR strategy with 25 grand. You're not gonna start flipping houses with 25 grand, right? Like, there's very few businesses that allow you to scale up at the same pace that you can in a land investing business. And I think sometimes we lose sight of that. We need to keep that in mind that, yeah, 20 to 25 grand might seem daunting to save up, but if you go and put your head down diligently, work a job or work a side hustle, whatever it may be, to start getting some income in, you can save that in 12 months or less. It's my opinion that you're gonna have a much higher likelihood of success if you're starting with that budget. I've seen so many people get involved in this business and they're starting with a shoestring budget and they ultimately give up at a certain point because they feel like, you know what, it's just not worth it, right? I'm buying these properties for $1,000 and selling for $2,000. It's not super awe-inspiring. But once you start scaling up and you have some liquidity, there's deals out there that you can buy for 10 and sell for 40. There's deals you can buy for 20 and sell for 60. Like, that stuff happens. I think the earlier you can get that win under your belt, the more likely it is that you're gonna stick around with this business. It's just human nature. If we can get a quick win when we're starting a new endeavor, we are infinitely more likely to stick with it. And so you can engineer your success by having enough liquidity set aside to go after quality properties that are gonna make meaningful returns and are gonna get you hooked on this business. I know my answers here were rambly and all over the place. If you've made it this far, I really do appreciate you for sticking around, but it's a topic that I'm passionate about because when I started, it was a grind at $9,000 and I get inquiries all the time on email and Instagram and YouTube with people asking, hey, I'm thinking about getting started. How much money do I need? The honest truth is that I think 20 to 25 grand is a safe bet if you're just getting started, or go and find someone to partner up with, create an LLC, and go in on this opportunity with them together. If you guys have any questions, please drop them down below. I respond to absolutely every single comment. If you like this video, please give it a thumbs up. It would mean the world to me. And if you want more free land investing content, be sure to subscribe. We've got a ton of new videos in the pipeline. I'll see you guys in the next video.